Friday after hours, one of the better stocks of 2020 and 2021, EBIX, took a colossal 39% nosedive. So what the F happened, man? Well, first let's talk about what EBIX even is. EBIX is a company based in America but quickly expanding into India. They provide software and e-commerce, primarily in the insurance industry. They do that four ways: through exchanges, carrier systems, broker systems, risk compliance systems. And we would consider them a software and IT services stock. They've quickly become the dominator of the US exchanges by automating the process of acquiring insurance policies, various policies as you can tell, and it cuts down on the number of middlemen involved anyways. And what this does is it really lets it be an easy process for various companies, both big and small. They just signed with JP Morgan, by the way. It really helps those companies get a quick and sometimes cheaper access to various insurance, and it really brings all those types of insurances together under one umbrella and does it all digitally as well. And what this has let them do, in my opinion, is create a technological moat. And they've been integrating and acquiring tons of smaller businesses as of late, particularly in India. These guys have been buying up everything: insurance companies, online education companies, even travel services, foreign exchanges, you name it, they've bought it. They've been in more pies than Jason Biggs. Let's take a look at their fundamentals here. Revenue growth 22.38%. That's their 5-year average year over year. Net income has been 9.27. Free cash flow has been 15.13. Meanwhile, their profit margin is great. Their shares have been being bought back over the last 5 years, and they're healthy from an equity to a liability standpoint. So what's the deal? Why this giant drop all of a sudden? Well, the news has shown that their auditor wants to leave. They're in the middle of a breakup here, folks. The auditor is citing significant unusual transactions in the fourth quarter of 2020, and they're primarily talking about EBIX's gift card business in India, and they're primarily talking about this $30 million here. When I did more reading, it seems that EBIX has been really showing tremendous growth in the gift card businesses, and that seems a little fishy to their auditor. Their auditor's wanting and been requesting more information and more numbers and wanting proof, basically, that this is all on the up and up. And EBIX is saying that people in India are buying more of these gift cards because with COVID going on, less and less people want to use cash-based currencies and they want to use digital currencies, and that kind of makes sense. And EBIX is saying that accounting for the business in the net income is consistent with GAAP, and they don't know what the big fuss is about, basically. So RSM says they're leaving, and EBIX now has to find somebody else. Well, has this created one of those situations that the OG investors always told us to be on the lookout for? Has it presented an opportunity where a good company is now available at an attractive price, all because the market is overreacting to negative news? Well, it very well could be. To figure that out, I feel like we could do a little math here. In 2020, their net income was $97 million. Let's say we felt like the worst case scenario for this situation is that they don't get to count the $30 million in the net income. Well, that makes the net income $67 million last year. If we take that and we divide it by today's number of outstanding shares, that gives us 30.96 million. And that gives us an EPS of 2.16. And if you don't know how to calculate PE, what this EPS lets us do is figure out what the PE is. We take today's price, as of me recording this, 30.46. We divide it by the EPS. That would give us, I guess, what we would call an adjusted PE of 14. So what we would be saying in this situation is we feel like worst case scenario is that they don't get to count any of that. They still would be trading right now, as of today, at a 14 PE. So from a value investor standpoint, that's fantastic. And even best case scenario, if they do get to count it and that 97 million stays, then they're actually today at a 9.9 PE, even better. So if you're strictly a value investor and you have full confidence in EBIX right now, you would be buying it up. Well, before you bust out your checkbook, let's just quickly recap the pros and cons of EBIX's situations. On the plus side, we saw they have good fundamentals, but do you trust those fundamentals? Is there something fishy going on? They have great growth, and they're going to continue to have great growth because of their expansions into India, which is arguably the hottest market in the world right now. And this is also perfect timing with India's, as a country's, cash to digital economies changeover. And that's the way, the space that EBIX operates in. And so this is prime, perfect timing for EBIX to be moving into India. You have the recent news, the deal with JP Morgan last month. And as we just figured out, they're at a good price for value investing. On the negative side, you got to ask yourself, are there other auditing issues going on? Is this just the smoke before the fire? Do we next week see them show, does news just suddenly start popping up? Also, there's this other auditing issue going on. I also found in 2017 that there was a lot of fuss from current investors at that time when EBIX signed an unknown and obscure Indian auditor instead of going with an established American-based accounting firm. And that's not to be discriminatory or anything, but it's common knowledge that Asian accounting, we're usually referring to Chinese, but Indian as well, doesn't exactly have a great track record at being totally trustworthy in the accounting practices. You got to ask yourself, is EBIX over acquiring and under integrating? Are they buying up these businesses too quickly, and are they not integrating them? When I did more reading and research, in fact, I kind of saw that the vast majority of these companies that they're buying, they're not integrating much of the staff, particularly the higher ups of these companies they're buying, into the process. They're kind of just buying them out. And then you have to ask yourself from an investment standpoint, how long does it take the market to realize what you realize? If you feel like EBIX is a great deal right now, you still can't make profit off of that until the price goes up, until everyone else on the market also realizes, hey, EBIX is trading at a good price. Now, that's something you're used to if you're a very long-term value investor, but it's just something to keep in mind. So if you ask me what you should do, well, I've ranked your options here, 1 through 5. And 1 being you have the utmost confidence in EBIX as a company. You believe everything they say. Well, if that's the case, you'd be buying right now. If you're a little less confident, you could always sell put contracts on them. You could try to get them at a lower price. You could either collect some premium on them if the puts don't trigger, or you could be getting them at a lower price if the price continues to dip. Meanwhile, you'd be getting paid a little premium on top of that. If you're even less confident, you could consider buying some far out calls. And when I say far out, I don't refer to out of the money per se. I'm more referring to far out in time. You could buy some calls a ways out, give people time to rebound EBIX, and you might be able to get them at a cheap price while meanwhile having a lower risk tolerance here. There's always a chance that there really is something serious going on with EBIX. And if you just straight up do option 1 or 2 here, you could be worse off than doing number 3. If you're even less confident than that, you could always just wait and see. Who is their new auditor they're going to choose? Do they choose someone established? You could wait and see for earnings, because that is very soon as well, within the next couple weeks. So that could shoot it up or it could shoot it down. You never know. And then if you're even less confident than that, then you can simply forget that this stock even exists in the first place. That's totally up to you. It's not my job here at Teaching Wealth to tell you what to do with your money. My job is just to give you tools and knowledge and to help you come to your own conclusions and take control of your own finances. I encourage you that if you learned anything, you please consider subscribing and liking this video, or joining us on the Discord. We have free options as well, and I hope to see you in the next video. Thanks for joining.